Welcome to Business Exit Success, the podcast dedicated to helping small business owners on how they can successfully transition out of their business on their terms while also living a life of purpose and fulfillment after the sale. I am your host, certified financial planner and certified exit planning advisor, Tom Poltersdorf. Welcome back to Business Exit Success, everybody. We are diving into retirement plans today, specifically the SEP IRA and Solo 401k. And when it comes to retirement planning and setting up a plan to save for your financial future, there are many types to choose from. I'm grouping the SEP IRA and Solo 401k together because they are a good fit for the business owner who has no employees. So this is for the solopreneur. This is for the husband, wife, spouse scenario if you both work in your business. Now, maybe you use independent contractors for 1099 work, but for the most part, you do not have any W-2 employees. Let's first talk about the SEP IRA. This plan has been around a long time, and it's perhaps the easiest one to set up and start putting money away. They can be established anytime before you file a tax return. So if you have nothing set up right now, and it's currently February of 2023, and you determine the SEP IRA would be a good fit for your business, you could set up a SEP IRA right now and make a prior year contribution for 2022, as long as it's before the tax filing deadline, April 15th, or before the filing extension deadline. And you'll get a tax deduction when you do this. Now, that isn't advice, obviously, to do it. I would suggest talking with a CPA first, have them review your income to determine how much you can put in. But I literally did this with a client earlier in 2022. She was a real estate agent, self-employed, no employees, had a great income that year. So we maxed out a SEP. Just make sure you document and make a note that the contribution when you do this is for the prior year, and you'll be good to go there. Now, the amount that can be contributed to a SEP IRA is the lesser of 25% of your adjusted net earnings, or up to the cap of $66,000 for 2023. Now, that number, the cap, gets adjusted for inflation every year. For last year, for 2022, it was $61,000. Now, this calculation can get a little messy. So again, speak with a CPA first, depending on your income, but you can put away a decent amount of money in these plans relatively easily and pretty quick. Now, some key differences I will mention with the SEP, there are no employee contributions. So the money that goes into the SEP is all considered employer contributions. There are no catch-up contributions. So a catch-up contribution is extra money you can put into a plan if you are over the age of 50. This doesn't exist with the SEP. There are also no Roth contributions, and there are no loan provisions. So you can't borrow against the SEP IRA like you can in a 401k. You can also exclude certain employees with a SEP IRA. You can exclude part-time workers, those under the age of 21, and those who have not worked for you at your business in at least 3 of the previous 5 years. Now, this is important to understand with the SEP because if you have an employee or 2 or more who does qualify, you will be required to contribute a proportional amount to your employee's salary or wages. So as an example, if you contributed 20% of your earnings into your SEP, you as the employer would be required to contribute 20% of your employee's earnings into a SEP. Now, not many business owners want to do this, hence why the SEP IRA is most popular for those who have no employees. Because once you contribute that money into your employee's SEP, it's technically their money now. There's no vesting period. They can essentially leave the next day once the money hits their account, and you can't do anything about it. Now, with an individual 401k, you can make employer contributions like the SEP, but also you can make employee deferrals. So if you are an individual solo business, you are essentially the employer and also the employee. So as the employee of your business, you can put in up to $22,500 in 2023, plus an additional $7,500 if you are over the age of 50. So you can technically put in 30 grand into this account. And then as the employer, you can put in an additional 25% of your earnings on top of your $22,500 or $30,000. So if you're an independent business owner making good money, you have low overhead, and you want to really aggressively save some money, the individual 401k could be really attractive. So let's look at an example real quick. So you're self-employed, no employees, you have $100,000 in earnings, $22,500 would be your employee deferral into the 401k, and then 25% of your $100,000 in earnings, so 25 grand, would be your employer contribution for a total of $47,500 going into your solo 401k. Now, this is if you wanted to max it out, right? This is being really aggressive, which not a lot of business owners want to or can do. But if you are an owner starting a business later in life, or an independent consultant, real estate agent, anybody that's independent doing your own business, and you want to aggressively put money away, if you have the earnings and the wherewithal to do that, you can make it happen. The Solo 401k is a really great tool to make it happen. Now, let's talk about maintenance of the plans. So what regulatory rules do you need to follow? Is there any administrative burden to either the SEP or individual 401k? And honestly, for both of them, it's not bad at all. For the SEP, the annual maintenance is very low, basically next to nothing. For the 401k, there is some maintenance and reporting requirements when there is greater than $250,000 of assets in the plan. A single form needs to be filed. It's called a 5500 EZ form. And this is just an informational return that is filed with the IRS. It's really no big deal. But any solo 401k plan that has less than $250,000 in plan assets, there's no filing requirements at all. So again, pretty straightforward. Now, when can you open the SEP IRA versus the solo 401k? For the SEP, I mentioned briefly in the beginning, you can open a SEP as long as it's before the tax filing deadline, including extensions. But for the individual 401k, that needs to be open before year end. And if you wanted to make an employee contribution, it would need to be made, again, before year end. But you can make prior year contributions for the employer portion on the 401k. Now, for both the SEP IRA and the solo 401k, any money that is put into these plans can be invested. It grows tax deferred, and you can use your deferrals and contributions to offset your income for the tax year. So it's a real easy way to save on taxes. In the show notes, I will include several links that get into the specifics for each of these plans. If you have any questions, don't hesitate to reach out. We work with business owners all day, every day. Setting up a retirement plan for yourself is essential to saving and investing for your financial future. Also, stay tuned for those of you who have employees in your business. We will be digging into other retirement plans that work well in those scenarios on upcoming episodes. Hey everybody, real quick before you take off, if you found this episode helpful in any way, please rate the podcast and leave a review. I would love to get your feedback and see if there are any topics you'd like to hear more about going forward. Thank you, and I appreciate you all very much.